When I first started investing, I had no clue what I was doing. I've made mistakes, I've learned a lot, and today I'm answering the questions I wish someone told me when I first started. These are real questions people ask me all the time. Everything from how to start to how to stay patient when your favorite stock drops over 30%. Whether you're brand new to investing or looking to improve your investing game, this video will help you out. And I plan to make this a series, so drop your questions in the comments and you might be featured in the next Q&A. Let's start with the question I get a lot. How did I get into investing? So first off, investing was always something I knew I should be doing, I just didn't know where to start. But last fall, my friend introduced me to cryptocurrency and that's how I got started. I enjoyed the process of learning, watching YouTube videos, researching, and putting my money towards things and letting it grow. So then after about a month of crypto, I knew I should probably look into the stock market as well. And this is really where I started to gain my passion. I would sit there and just watch YouTube video after YouTube video, trying to figure out how do I even research stocks, what stocks to buy, where to get my sources from. And that's basically how it first started. I had a friend introduce me to crypto, then I got into the stock market and basically fell in love with this process of researching companies. Now the next question I got is how do I even get started? This is probably the number one question I get, and this was the number one question I had when I first started. So the first thing you want to do is open up a brokerage account. You could think of a brokerage account kind of like an investing bank account. It's a place where you do your investing. So there are a lot of different brokerages out there, but my favorite one that I've been using is Robinhood. If you want to download Robinhood, you can go to the App Store, search up Robinhood, and it's right there for you to download. It's very easy. The setup process, you'll need a few things like your social security number, a phone number, email, then you just need to create a username and password, and then you'll be all set to go. And then once you have your brokerage account, what I would personally do is buy an ETF, an exchange traded fund. The easiest way to explain an ETF is thinking about it like a basket of stocks. Instead of buying an individual company like Amazon itself, you could buy an ETF that holds Amazon, Apple, Google, Nvidia, Meta. It could be hundreds to thousands of companies, and you do that all with one purchase. This is the easiest way to limit risk, stay diversified, and have steady long-term gains. For me, my two favorite ETFs are VOO. This tracks the S&P 500, the 500 biggest companies in the US. And then QQQM. This tracks the NASDAQ 100. The NASDAQ 100 tracks 100 of the biggest non-financial tech stocks. So now you have your brokerage account set up and you've already bought your first stock. Now it's about staying consistent, continuing to learn, and just understanding you will not be perfect. Investing is one of those things that you have to make mistakes to continue to get better. I made plenty of mistakes and I've lost some money doing some dumb stuff. But without those mistakes, I would not be the investor I am today. Remember, small, consistent investing will always beat waiting forever to start. Now the next question I have is what is one piece of advice I wish I knew before I started? This is one I've gone back and forth on trying to figure out if I could only pick one piece of advice, what would it be? And I think it is time in the market beats timing the market. Now what that means is never trying to time the market, just buy stocks when you can as consistently as possible. The market in the short term is crazy. You'll hear people talking about a crash is coming next month, there's gonna be a huge dip, don't buy stocks now. The thing is, no one ever truly knows. If you get caught up in trying to time the crash, you will miss out on so many gains. The S&P 500 in its history has had many crashes, many corrections, and many dips. The problem is no one knew when these were coming, so if you were waiting for the next big crash, you likely missed out on years of gains. That's the one thing I wish I knew, and I think every beginner should understand. Don't try to time the market, just invest when you can as consistently as possible. Now the next question is what is the biggest mistake you see beginners make? Again, this is kind of a question I've gone back and forth on, but I think the number one thing is buying stocks that you don't know. I think the easiest way to lose money over the long term is just buying the stocks your friends tell you to buy or that person on YouTube tells you to buy without you truly understanding the business itself. I've fallen victim to this. When I first started, I was just following what other people bought instead of truly knowing the company. Now I try to do my best to truly understand the businesses and why I'm investing in it, but a lot of the times it was hard for me to explain. Since then, I've really upped how I research companies and I make sure that if someone asks me why I'm investing in a stock, I can explain it to them in a minute. So the biggest mistake I see is people not understanding why they're investing in a company. Now the next question I have is, as a beginner, is it better to buy individual stocks or ETFs? And I think the consensus to this answer will be buy ETFs. ETFs are just a safer starting point. You're gonna become instantly diversified, you're gonna limit your risk, have steady long-term gains, and you will not have to do much research. Now I believe ETFs are better for a majority of people, but I still think for everyone, individual companies have their strong points. One, I think it's a great way to learn. When you buy individual companies, you have to learn about businesses and how they work. You have to go through a research process. You have to look at leadership, you have to look at financials, you have to look at their competitors, you have to look at their products, you have to look at a lot of things, and I think it's a great way to just learn business in general. I also think pairing individual companies with ETFs is a great way to have better gains. Let's say you hold about 70% of your portfolio in ETFs, and then the other 30% in a few individual stocks. That 70% in ETFs will give you stability. That's your foundation. Now that other 30%, let's say you hold about 3 to 4 companies. For me, that'd be like an Amazon, ASML, and Google. If those stocks do well, it'll help boost the gains of your portfolio. I think when done right, ETFs paired with individual stocks is a great way to go, but for a beginner, ETFs is the best starting point. The next question is, what sources did you use to first learn investing? For me, the number one way I learned is watching other YouTubers break down how they buy companies, what stocks they're buying, and how they go about market news. One of my favorite YouTubers out there that really helped me is Joseph Carlson. His way of going over market news and researching world-class companies is something I try to model. If you're someone looking to improve your investing, I think going on YouTube and just learning about how other people go about investing is a great way to gain different perspectives. It has certainly helped me, and it has shaped who I am becoming as an investor. And now the last question I am answering today is, how do I stay patient when one of your favorite stocks drop? I think the number one way to stay patient and not panic when stocks drop is to do thorough research and trust your research. I have 2 stocks right now that I like a lot that are not doing well, both Adobe and Duolingo. I can tell you confidently that I have not panicked once because I felt I did a very good job researching the companies, and I'm trusting my research that in 3 to 5 years, these stock prices will be a lot higher than they are now. You really need to focus on the long term. In the short term, the market is crazy. For me, I've seen Duolingo drop 5%, go up 10%, go down 10% the next day. It's just all over the place. Understanding that I am not looking to sell out of Duolingo in a month, but maybe in a decade, I don't care what's happening in the short term. And honestly, I kind of like when the stock drops because then I could buy my favorite companies at a cheaper price. But really the way I stay patient is doing thorough research, sometimes taking weeks to research companies, and then just trusting that research. And that is going to be it today. Like I said, I plan to make this a series, so if you have any questions about investing, feel free to drop them in the comments. I would love to answer them in the next edition of this series. Always remember, everything I say should not be taken as financial advice. It's more for educational and entertainment purposes only. Before buying a stock, you should always do your own research. Thank you for watching. If you like this video, dropping a like would be greatly appreciated, and subscribing would also be awesome. I also have a lot of other investing videos on my channel, so if you like this video, click the video on the screen right now and it'll take you to another one. Again, thank you for watching, and I'll see you in the next one.